Good day, guys. My name is Oluwatao Joseph, and I'm your voice instructor for Learning with Pro. Today, we are already in week 4. Now, we're talking about trends. Our last class, we talked about support and resistance trend. I think we talked about how to draw a trend, candlestick, things like that. So, today, we'll be taking a look at trend reversals. Then we'll be taking a look at price action patterns. Now, what is trend reversal? This is the process by which an upward trend, which is defined by successful highs and highs and low, can reverse into a downtrend by changing to a successful high, lower high and lower lows. I explained more of this in the last class, so if you have not checked it, you can go online on YouTube and check our videos. Everything is being stored online on YouTube. Now, this is a support. This is a resistance line. This was a resistance line before. Now you can see it's changed to a support line. And now I told you in the last class, resistance line is the one at the up, and support line is the key level at the down. These are support line. This is a 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 resistance line. This is a resistance line. A resistance line. How to identify them? Just a point at which price gets to, then instantly it shifts, it changes direction. That's it. Price go to this point, it change direction quickly. You go to this point, it change direction quickly. So that means this is a key level resistance line. But now, I told you that in a resistance line, you will be looking for sell. Why in a support line? What you'll be looking majorly at is a buy. In a support line, you buy in support key level, then you sell in resistance key level. That's just these are keys. These are keys they have studied. These are keys that are studied. Now, if you look at this process now, when market goes to this place, instead of it to sell, it broke. It broke this structure. They call it breaking structure. It broke this structure. Now went high. Now, if just that this is a price, like this is a market, maybe currency pair or gold or anything, you can if you trace this point at this particular time back to history, you see that this may be a resistance level before. It will even be a resistance level. There will be a key level here. There will be a key level because price came to touch here, now came down back to touch this resistance line. Now this process, we call it resistance turn support. And anytime resistance turn support, you'll be looking for a buy. You can see I told you at support level you buy, at resistance level you sell. You have to put that keynote. You have to understand that keynote. Now higher and higher you, I told you in a uptrend we have higher highs and we have higher low. Now in a downtrend we have lower high, we have lower low. You can check our previous video to understand more of that. Now you can see continuation. If the price rise above a resistance level, a resistance line, it will often become support. As the price moves past a line of support or resistance, it is considered that supply and demand have shifted, causing the bridge line to reverse its rules. For a true reversal to occur, however, it is important that price make a strong move through either the support or the resistance line. Now, channels. What are channels? The concept of channel is very much similar to trend line, but channels can occur maybe in a uptrend or a downtrend or in a consolidation. Now, to identify channels, the channels value are good points for reversal trade with small stop loss. Let's go to the next slide so you can see also what channel means. What channel is all about? It's just a point at which you can draw a range. Let's use the word range. That means the point at which market move. the point you can see the market move and like it's forming like a resistor. It can be horizontal, it can be, but it's forming like a horizontal a horizontal pattern here. Horizontal pattern, that means the lines are parallel to each other. You can see this one is parallel to each other, it's parallel to each other. So these are range. You can see the market is ranging in this particular direction. This now is a constellation. This is China is a constellation, and this is a downtrend. This is a channel in a downtrend. This is an uptrend. You can see this is a channel in an uptrend. So you want to understand channel. Channel is just you trying to draw two parallel lines to match the market structure. It may be an uptrend market structure, or it may be a downtrend, or it may be a constellation. So channel is about you join two parallel lines in the form of a parallelogram. You can see, to match the movement of the market. No, so now movement of volume. What is volume? If you open trading view, you can go online and search trading view. If you open trading view, you will see something like this there. But it's also in your MT4 or MT5. You add it through indicator. Want to add you go to your MT4 or MT5, and I will still upload a video on that, on how to add indicator. But we'll still be using indicator now. This volume is a way of predicting price. How? It uses this volume is more of for fundamental analysis. It's more fundamental analysis. Now, trading volume is the number of quantity of stock which change hands. The volume is shown as a subgraph in the price time chart below the price window. These are the volumes now. How to now trade the volume? Let's move on. Now, higher the volume in any particular move, the greater is the conviction that the move to continue greater distance in that direction. So this is just more of another way you can predict, okay, is the market going to sell, or is it going to buy, or at which point is it going to sell, or is it going to buy? But it does not work every time. It does not work every time. This is just like a confirmation. Maybe you have done your analysis, then these are confirmation. These are confirmation. For you to enter a trade in a forex market, at least you must have done like three different strategies to confirm that, okay, is this a buy trade or a sell trade? You have to know that very, very well. Know that very well, so as not to make losses. You must have seen a very, very good strategy, like use three different strategies to analyze the market. Now, the higher the trade, the harder the confusion that it will go, then the lower the volume. That means the stock is losing momentum and it can change. You can see, note, in an uptrend and the volume is high, the trend may go greater distance. And in an uptrend, if you see that the volume is low, it may likely retreat. And it's also the same thing for a downtrend. And let's go back, you see what I'm saying now. Now, okay, this is an uptrend. You can see. Now this is an uptrend. This market is going up. This is a high, this is a low. This is a high, this is a higher low. This is a higher high, this is a higher low. This is a new higher high, this is a new higher low. This is a new high, this is a new high. The market change. This is a lower low. This is a lower high. You can see. This is a lower low. This is a lower high. Then market change again. This is a minor move. We call this minor move. And this is a lower low, and this is a lower high. Now, to not look at the volume, let's look at the starting from it. You can see this green went up more than the rest. Is that in this position? So that means, and you see that this is an uptrend. So that means it's likely that this market will continue to be in an uptrend, and you can see that it continues to be in an uptrend. You can see that now when this red is falling, you can see that the low is low. But you can see that the volume is high. You can see it's going on, it's going on, it's going on. You cannot trace it down here. You can see that it did not show quickly. That's why I said that you must not rely only on it. It did not show it quickly. It showed here. It began to show here. Okay, this market is already losing, but it's already showing. It was showing that this market is losing momentum. You can see. That's why there is no high. There is no high follow. It was showing that the market is already losing momentum, losing momentum, losing momentum, losing momentum. Then it came here again, and this is now a downtrend. You can see it brought out high. So you can see if we check this market, you see that it came down. This market came down because of the volume is high. So the higher the volume in an uptrend, the more like you can pray that market will still go more. But the lower the volume, that means the market is likely to retrace. So you have to note that down. This is trading with the volume indicator. Now moving on to price action. Now you have different types of price action. There are many types of price action, but I'll just be teaching you guys the major ones that I know that in every chart you'll be seeing it, and is I like now let me say 99% sure that you go that direction. 99% sure that you go the direction. So the first is head and shoulder pattern. Head and shoulder pattern. Now, how is head and shoulder pattern is? Let's move on. You can see the head and shoulder pattern. You can see this was first in an uptrend, then change direction. Now, this is a high, this is a low, this is a high, this is a higher low, then this is a higher high. But you can see that it did not form a new higher low. It did not form a new higher low. Okay, so it formed a new higher low, then came back, but it did not form a new higher high. It did not form a new higher high. The price reversed. Price reversed. This at this particular point is called a retrace. This one is called a retrace, because as price reverse like this, normally it's supposed to go down, but it will still retrace to gain momentum so that it can hit people to stop loss. That will be talking more of liquidity, but that's more of the later class. We'll be talking more of the liquidity. Now the market retrace, but normally it's supposed to just from here, from this rise shoulder, supposed to go down. That means it's supposed to sell. The market is supposed to sell, because now I know I told you this is a resistance line. I have see. If I draw this line and this is a resistance line, and if you draw this place, it will happen in a resistance line. That's more of the way to confirm that okay, is the market going to respect this pattern? It must happen in a key level. That means there's a key level here that make it to form this head. That means when price get here, it rejected, came up, rejected, couldn't go further, came down, trying to build momentum, but it couldn't go. It went back to take people to touch people profit here, because some of the people now they have set their buy stop here at this particular level. They are cash in this particular level. They have set their buy stop here. So market came down to take people out of the market. To take people out of the market, okay. To take people out of the market, they begin to sell. So that's why we call it an head and shoulder. You can see this is the head, this shoulder. The shoulder is not up to the head. The shoulder is not up to the head. The shoulder is not up to the head. Now, the head and shoulder pattern is a bearish reversal pattern. The pattern appears after an uptrend. This pattern is formed with two consecutive tops with middle one being higher than the two. You can see the middle top is called the head and the two side peak are called the shoulders. On joining the intermediate jump, we got the neckline on ultimate break below the neckline. Usually, a short trade is taken with a stop loss. above the top of the nearest soldier. This target is usually considered as a distance between the neck and the head. The neck and the head projected from. Now you want to trade this pattern now. You calculate the distance, that means the pips from this neckline that was first formed to the head. It may be 100 pips, maybe 20 pips, maybe 10 pips, maybe 30 pips, maybe 10 pips. Then you set your trade here. You enter the market here, you enter a sell market here, sell market here. Then you set your trade to the amount of pips that is here. Note that down. Your trade, your stop take profit will be the amount of pips that is covered from the neckline to the head. And note, in a real life market, it may not be like this. The market may still come up. It may cross this line, but it will not be too much. It will not get to this level. When it gets to this level, don't take that trade again. It's already broke structure. There is already a break in structure. It will not get to this level. We just touch here small, just to take some people with small account out of the market. Then start going, but it will surely go down in a sell trade, in a sell position. And we have the inverse. The inverse is just opposite of it. It's just a mirror in it. So in the inverse, you'll be looking for a buy position. The inverse will be looking for a buy position, but don't worry. More of this, I'll still trade it in a live account for you guys, so you can see it. I'll still upload my trade in a live account, and you see the price action. You see me putting them into action with an account, most probably a demo account. Now, double top and bottom, double top and bottom. Now, you can see the double top and bottom pattern. That is the top and bottom pattern. Now, double top and bottom and double top pattern. Firstly, double top pattern. This form after a uptrend. This form after a uptrend. You can see. This is an uptrend. Then you go to this key level. First pick. Go to this key level. Then price rejected. Came down. You can see. It came to touch the body of this bearish candle here. Going to call it body of this bearish candle here, then went up. But this is a minor, we don't count this, but it went up to the second peak level, the same key level with the first peak level. Like this now, it has formed a double top. You can see that's formed a double top. That means the double top means that it has reached a maximum level of peak, and reached a maximum peak level. That means price did not have any momentum pass this level. That's the meaning of that double top. It did not have any momentum again to pass this level. I see the price came down here, then came to retrace with the shoulder level, then begin to go down. Can see more of these things is just talking about resistance and support level. I told you that in the resistance, more of the thing we'll be looking for is a buy. In a resistance key level, you look for buy. Then the support key level, look for a sell. This thing now, when you see this trade like this, you can see it came here, came to touch down here, came up to this same level. Normally, if you enter a sell trade for me, you will be in profit. But it's not advisable yet to enter a sell trade for me. You wait patiently. In forex markets, for you not to lose your money too much, you have to wait patiently. You wait patiently for price to touch this level, and you see that okay, this is the same with this level. Then wait again for price to touch this level. You see that it will match your structure. Then you cannot take your trade, a sell trade for me. You know that okay, price respect all my confirmation. Now okay, this is a sell trade. Put a sell trade. That's the more reason why for a sell store limit order. So in case you may not be sitting down with your phone, it's not compulsory for you to do with your phone again. But you can just use a sell limit order to take this trade. When you just put the first price at this level and the second price at this level. So when it goes to this level, when you get to this level, it will automatically enter your trade for you. When you get to this level, it will automatically enter your trade for you. Then moving on to the double bottom. Double bottom happen after a downtrend. So I think it's the same thing, just reverse of that which I was saying in the first one. Came here to touch this particular place, went up. Came here to touch that particular key level. That particular key level. That particular key level again. After candles have been formed in the middle. Okay. Came here, went up, came down again to retest this level. Then after this I can take it back to go up. So everything is just simple. Now moving on to triple top and bottom. Sorry. Triple top and bottom. Triple top and bottom also is the same thing as double top and double bottom. Yeah, almost the same thing. Let me just show you a graphical example of it. You can see. Now, price came, you can see this is the resistance level. Price came to touch here, come down, touch here, come down. Now touch here again for the third time, came down. Then notice, sorry, my mouse. Sorry. So, you see, price came here, come down. Now came to retest this level. You will notice this is even a support level. This is a support level. This is a support level turn resistance. Because if you match all these lines together, sorry, if you match all these lines, sorry, this is the resistance level. That's it. The resistance level from here. The resistance level from here. So if you match all those lines together, you can see that this is a level also. Price came here to just retrace it to touch to fill up the void and the gap that is there, the void and the gap that is there. Then it came down. Price came down. That's it. This is just a confirmation, like a 3 times confirmation for a resistance level. That's just the simple way to put it. Now moving on to the double triple bottom. It's also the same thing, guys. First level came, second, third. You can see it came, then came to retrace. If you see this point at which you retreat, it retraces to this place. Here is the same thing. This is a support level. Then we look for a buy. Just simple as that. Moving on to triangles. What are triangles? Triangles are one of the most well-known chart patterns used in technical analysis. The 3 most common types of triangle are symmetrical triangle, ascending triangle, and descending triangle. Now, what are symmetrical triangle? Symmetrical triangle, how to draw a symmetrical triangle? It may occur in a uptrend and a downtrend, may occur anywhere. But now, the difference is that in a symmetrical triangle, you cannot predict maybe it will go up or down. Note that this drawing, they just draw it that okay, when it gets here, it will go up. No. In symmetrical, you don't predict maybe it go up or down. It can go anyway. It may go up or it may go down. That's why you have to cool down. You have to cool down. You can see after a uptrend, it's building up. But the reason why I call it symmetrical triangle is because the 2 lines touch each other. It came to meet each other. You can see this was going up. This is a lower low. This is a lower high. This is a lower high. This is a lower high. A new lower high. This is a this is a higher high. This is a high. This is a lower high. This is a low. Sorry. This is a low. This is a lower high. 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 Then this is a high. This is a higher low. higher low, and this is a new higher low. You can see a new higher low. Price went like this, they came like this to form this point. This is a point at which it break out. See, break out. They came to retest, then break out. But it may go the opposite way. It may be like as it came here, came down here to touch this again, then come down like this. But you still come to retest the level, then begin to go down. So it can be two different way. It can be two different way. Then ascending. Ascending is just only one way, and descending. Ascending is a buy trade. How? You can see. Price is moving from an uptrend. It may be an uptrend, it may be it's mostly an uptrend. Price is moving from an uptrend. They came to this point. Came to this point. At this particular key level, you can see. Price came here. Went up again, 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 came here. So you went to this point and it broke out. Now, this concept in we call it build up. Price is building up. If you see the price do something like this, it may happen when we begin to touch more of premium discount level, things like that. Institutional order block, you'll be seeing liquidity, you'll be seeing more of this. These are build up in a market. If you see market doing like this, if you see market building up like this along a consecutive line, you know that market is trying to break out. That means the buyers are trying to get, the buyers are getting to position. The buyers and sellers are fighting, and the buyer is gaining more of the position. That's why I see that it's going up, 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 it's going up. The seller are losing value gradually. That's why I say it like this. Then to get to a point that it will just break out with full force. Sometimes it may cause a snap entry. It may cause a snap point. That means the market break out suddenly. That's the essence of build up. You see, descending, came to this place, went up, in this place, couldn't break, it went up, came to this place, it's building momentum, came to this place, until you get to this place, then broke the eye. That's it, came here, then came back to retest. By this this is support storm resistance. You can see came here and took a sell. Now this is a resistance turn support. If you come to retest it, then break out. So everything is just dealing with resistance and support. When we talk about flag now, flag is another type of price action. Now, to identify the price and the price action cut file. Now, if you see in a trade, you can see price was going up, came here. You know the way flag is normally as maybe Nigeria, USA, any flag. You know the way it has a flag pole. Then the flag is always like this and like this. There may be green, white, green, maybe red, blue, white, different color. Now you have to understand the difference between a flag and a pennant. Now a flag normally, you know that the two lines are parallel to each other. They are parallel to each other. They are parallel to, you can see. They are parallel to it. It's not bent. It's on a horizontal line to each other. You can see. This is horizontal, and the second one too is horizontal. Now when we are not talking about, and in a flag, it may be a bearish flag or a bullish flag. That is, like this, you can see this is a bullish flag. When it came here, price broke out. Price broke out. Then if it's a bearish flag, it should be opposite of this also. You understand? But it's opposite of this also. That means price will be in a downtrend. In a downtrend, then it break out. That's when we are talking about a bearish flag. Now this is a peg now. Now what is the difference between this and the first one? You can study it, you can just pause the video and study the difference. You can go back and study the difference. You can see the difference is just that this, you know that the previous ones are equal resistance, equal horizontal lines that are parallel to each other. But now, these are not horizontal lines. You can see this like they, they came to intersect with each other. This line it came to form like a build up. You can see it was building, but this one is is not like a build up. And see, price they are losing their level. They're losing their level. It just from big, it's getting smaller, smaller. They came to form like a symmetric triangle. Can see, a symmetric triangle then break out. Can see, this is a bullish pennant, and this is a bearish pennant. Can see, this we can use a symmetric triangle to explain it. Can see, more like symmetric triangle. Let's go back to symmetric triangle. You can see it's the same thing. It's a pennant. Symmetric triangle is the same thing with a pennant. Now moving on to wedge. What are wedge? What are wedge? And see the difference now between a wedge and a pennant that okay. The wedge chart pattern can be either a continual or a reversal pattern. It's similar to a symmetric triangle, except that the wedge pattern slants in a upward or a downward direction, while the symmetric triangle they generally show a sideways movement. Now, what this means that for a wedge to up or up, sorry, you can see that this is the market now. This is first of all a downtrend. Then came to form a uptrend, an uptrend, just a short period of time. This price now you can see that it's flat. It's not like this previous one. You can see that this previous one is like across is up like how will I put it? How will I put it? It's not slant in position. It's not slant in position. It's not slant in position. That's it. It's not slant in position. Price is not bent toward the action. That's it. This place, the price is bent. It's like bending. That's it. The price are like bending. The price is like bending. But this place just occur like suddenly with a period of time. You can see flat. You can see symmetry. Just happen. Just happen. It's not facing either up or down. That's it. But if it's wedge will be showing facing up. If it's a bearish wedge, it will be facing up. Then if it's a bullish wedge, it will be facing down. That's it. That's the difference. That's just different. All of them are also the same. All of them are still expecting the pattern of resistance and support. That's resistance and support are very, very important in the forex. Very, very important in the forex market. You can see. The wedge is facing up. This is a bullish wedge. Why? It's facing up. Now that on this any wedge that is facing up, you can see price was building up. They get to this point, they just fell down. And see, you go to that one too. Price was building up. They came to this point and fell and broke structure. Now, to calculate the wedge, you enter the market here. Now, to calculate how many pips for you to go for the market, you calculate the distance from here to here. From here to here. You can see you draw this your trend line. You connect the trend line like this and connect like this. Distance from this first trend line to the second trend line, you can use your pip calculator to calculate it. It will be your take profit. How many pips your take profit will be. The same for the bullish wedge. You can see distance from here to here will be your take profit. And I'll be doing more of the video with a demo account to show you how to can accurately put them into trading in live accounts. So thank you guys for joining today's live. I hope you understand. You can give me feedback on our website, on our email. You can give me feedback on how the class has been and how to improve it more. Thank you guys once again. kindly subscribe